Good evening. Let's call to order the February 23rd, 2021 Finance Committee regular meeting. Could you call roll, please?
Chairman Reinhardt,
Here.
Member Gardner,
Here.
Member Hoagland,
Present.
and Member Darnell is not present.
All right. Thank you very much. All right. We've got a guest of honor here today, Nathan Blackwell, the mayor. So the floor is yours.
I don't know of any group of volunteers, I don't know of any committee that out of the many that our city has that's more important than the Finance Committee. I don't know of any group that is more qualified, and I don't know of a group that is more faithful than you guys are. And we just want to say, on behalf of myself and certainly on behalf of the city, thank you. Thank you for your service. You are making a difference. We appreciate what you do. And we don't take it for granted. You're a big help, and we thank you so much. And we have just a small token of our appreciation the city would like to share with you, just as a small thanks for the big job that you guys have done. Thank you so much.
Thank you.
We've actually spent some of that money you guys are helping us watch over.
Well, did you know my size?
One size fits all.
Thank you, Nathan. Thank you.
Thank you, sir.
Thank you.
Sir, thank you so much for showing up and doing that for us.
Appreciate that. Have a great evening. That was very nice. All right, let's get started. If you guys can take a minute, if you have not done so already, and reread or read the minutes, and whenever you get the chance, Chair will take a motion.
I'll make a motion to approve the minutes from October 27, 2020.
I've got a recommendation for approval. Do I got a second?
For what it's worth, just on pages 4 and 5, member blank was me who asked the questions. And please don't note in the minutes that I was seeking any attention.
All right, now we know. So do I have a second?
That's all.
Do I have a second?
I'll second it.
I have a second. All right, all in favor, say aye.
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 Those opposed? Passes unanimously. Thank you. All right. Previous business. Looks like rate study of water and sewer funds.
So I'll be updating you on the previous business. Just wanted to give you a status, just to be fair, where we are and where we stand. On the rate study for the water and sewer fund, as you knew, we consulted with Reftillis, who is reviewing all impact fees for sewer, water, and on a additional project, they are also reviewing all other impact fees, which are mobility fees, park and rec fees, police and fire impact fees. Right now, we're on phase 1 of the impact review for police, fire, parks, and recs. We've done preliminary meetings, getting objectives, and this is in correlation with seeing how and what we can fund for the public safety complex, if our rates are at the correct levels. So we're on phase 1. Phase 2 will cover sewer and water, which is projected to be around May, where we start that phase 2 if we can complete phase 1. And then we'll have the results of that to both yourself and, of course, the council. So we wanted to give you an update that we are on schedule and on track with Reftillis on that.
Question, since you brought it up, with all that's going on, is there any, I guess, potential for some funding or direction towards the new facility?
Yes, a lot of actual work has gone through that. So currently, we actually have in addition to, I'll give you another update, is we brought on the North Group 65 group, which is Dr. Dave Russ. He's a consultant who has started to meet to prepare and analyze the capital improvement plan for 5 years. He's actually meeting or met with PD today for about 3 to 4 hours, and we do have an idea of, one, we solidified the land usage that they're going to have. It's been determined that potentially they will broker and sell the PD facility and get about roughly the assessed value about a year ago was about $5 million. We need to reassess that. And so now what we're doing is aligning capital to make sure that we can kick off the at least first 3 years, and they are in talks with the city manager as far as phasing that out. Ticket price roughly was $40 million over a spread of 8 to 10 years, and we're now allocating funding to at least get shovels in, in the dirt and start doing that. So we should see a lot of progression. Our focus right now is to get the first 3 years in to get them the housing that they need, and the EOC is a priority. 2 levels for the safety side, and then the comm center are the priorities at this point. So
It's good to hear. I didn't think we'd have much.
I have just a quick question on the police and fire staffing for my own information. Do you use a guideline of X number of, say, policemen per 1,000 or 5,000 or what have you? And are we within
No.
those guidelines?
Yes, the city has a standard, I believe it's 2.5 per 1,000. We're like at 1.7 or something like that.
So we need
So
to,
we're always, I've been doing this for a little while, and we've always been well below the standard of where we should be. So again, the chief and the council, like in 2000, approved 2.5 per 1,000. So I think we're in about the 95, 90 officer range right now. And I would think it puts us in like the 125 range for how many officers we would need.
okay.
Just off my memory, I'm not sure.
that's correct, and that was your second update, which is the police and fire. Since the matrix report has been finalized, it was presented through a workshop to the council, and some of the outcomes were staffing requirements that they are recommending for police and fire. The total number for the city right now is clocked in for 2021 at 32 new positions, which we've been estimating at about $3.5 million, which obviously we can't absorb in one shot. So right now what is happening is the city manager and deputy city manager are having departmental meetings to assess what are the priorities and what we need to bring on. We got a plan for a total all the way up to 2030 on staffing requirements. They're pretty large, so right now we're just prioritizing what the CM and DCM, are getting requirements from the departments and then present it to council again, to see what those priorities will be. Staffing numbers, you are correct. We were the 96.5 percentile. A lot of the positions for fire were in the detective and kind of analyst route, as well as obviously some officers. The anomaly in the fire department is there was some need for, on the administrative side, billing and admins. However, for the fire, the component that we have to equate is that even though they're recommending to bring firefighters on for 21, we don't have the space. So the priority has become to build the fire station. We got to give them somewhere to house those firemen before we can hire them on. So those are updates you'll all see throughout, but the matrix is at a final stage, and departmental meetings are being conducted now to finally present really what we're going to prioritize for this current year, fiscal year, and the preceding years.
Was I remember it's been a year and a half or so, they were going to approach or attack the Kissimmee Park Road one by the turnpike. Is that still on? They were going to do the remodel or live there and then build next door on that.
The newest update, and I'll get a total confirmation, was that the focus is a new fire station, and the updates to Fire Station 32.
Is that what
Yep, is still being looked at as far as need because of that space requirement that they have. They don't have a lot of, they even thought about temporary facility. And when we say temporary, we're talking 2 years, but that doesn't seem to work because we need to attach rescues and ladders and all that stuff to it. So no, at this time they're proceeding with that focus for about $5 million. The ticket price went down. So about $5 million, and we feel right now from what the analysis of the dollars are that we don't need to broker to do it. We have the cash, through police and public safety impact fees to absorb that. So we're strategizing that now. So that is a priority for us.
Yeah, just for your knowledge, it's been over a year. We went, I was on a committee, and I wanted us to be able to do it. I don't know when we're going to be able to do it again in the future, but I wanted to have us tour these fire departments to get a better understanding, because when the budget comes in July and we have our big meeting in July and people are asking for this and asking for that, and you're like, what do you mean you need this or you need that? And when you go and physically see some of these places, then you really, I think if we're on the same page, I think if it's 32, which is near the Turnpike,
Kissimmee Park.
that fire station, I'm serious, men and women sleep right next to each other. I can touch either side of you. That's how tight it is. It's like so compact. And we walked in and I'm like, it's just a little room for these guys. And there's just so much to it. So I thought this was last year. I wanted us to have a meeting in May of last year to kind of go around and do like they took us around and we got to experience these places. So hopefully maybe next year we'll have that opportunity if COVID changes things up, but I think it would be really helpful and beneficial for the team to go out there and see this, because when people do come in, then we can kind of go, okay, now we can advocate for them when they're asking for this stuff, because again, I was just shocked. We went into these places and you're thinking, this is a fire department that men and women are sleeping, they can touch each other. Not even a wall for privacy, nothing. And so I just see potential problems with that.
Big time.
And how they were designed back in the day. So just hopefully in the future we can get that. I know Bill was going to schedule things for us, but COVID hit and that just never played out. But hopefully we'll get some opportunity in the future. I think you'll really be surprised how things are.
Thank you.
All right, thank you.
Thank you.
It looks like it's both. Let's start with current business, and I guess you're going to be turning it over to Mr. Cooper
Yes,
to
sir.
go ahead with that. Oh, man, he's coming up.
He said in the bar, hi, sir.
Sounded like Spurs there for a minute when he was walking across, didn't it? Like, wow, he jingles
Okay,
when he goes.
Silver Spurs.
So for those of you that don't know me, I'm Jeff Cooper. I'm the Deputy Finance Director, so I'll probably be handling this report from here on out. So as we go through this is all for your benefit. So if you would like to see things that aren't in here, or maybe if there's some things that we give you that you don't think are that valuable, please let me know. So it's totally flexible. We try to give you a good overview of where we stand through whatever point in the year that we're reporting on. So without further ado, this will be the FY 2021 first quarter budget report, which ended December 31st, 2020. And this is as of last week when I put the numbers together. So the purpose, as it always is to present highlights of the city's first quarter budget report, and it's just going to give you an overview of revenues, expenditures, and key statistics by department for the fiscal year for October 1st through December 31st. Okay, we're going to start with the top 10 revenues. Of course, the biggest one is the ad valorem taxes. So through December 31st, including the first big drop of the ad valorem taxes, which actually took place in early January. I was doing these by the accrual method when I was doing this sheet. We'll get to that later. But so that is 72.1% collected of our estimate. Just for your information, that estimate of $13,694,568 is actually 97% of the total ad valorem taxes of $14,118,112. because we never collect 100%. Over the past 3 years, we've collected an average of 96.5%, so we bumped that up a little this year, and then we'll see how we do, and we may have to bump it back down a little bit. We'll tell you that through today, we've collected 90.6% of those, so just to give you a little update there. And as you look at the percentages of the amount collected, we're through, of course, 3 months, 25% of the year, so anything far off of 25%, I'll try to give you an explanation as to why that has occurred. Sewer service fees were 23.8% collected, so we're right on target there. Water service fees were a little bit under, so the estimate may have been a little bit high. We based it on the 5-year trend. And I don't think we've grown quite as much, probably due to COVID. The estimates were completed actually a little bit prior to my arrival and prior to the arrival of COVID. So, but that's not far out of bounds. Impact fees, 56.1%, and that is actually way ahead of pace. The primary driver to that is $2.7 million in reservation fees paid by the builders as they begin construction in new neighborhoods. So we estimated $2 million for the entire year, and we've already collected $2.7 million. So that's the primary driver of that one. For the 1% fund, as you can see, we're only at 10.4%, but before you panic, that is actually only 2 months. That's October and November. That we don't receive December's until end of January, and actually we just received we get a separate quarterly payment as well. So we're about 10% under where we were last year. So we're not going to collect $5.8 million unless a miracle happens, but it has been improving about 2% per month since October, increase over the previous month. So we're not going to be way off, but I'm saying somewhere in the neighborhood of $4.8 million probably. So the good thing is we didn't budget for those full amount of expenditures, so we weren't planning on spending all that anyway. Public utility taxes, we're at 16.4%. Again, that's only 2 months. December was not collected as of the end of January, so there's a little bit of timing there. And actually, we are 6% above previous year's collection rates. County gas taxes, 14.6%. Again, only 2 months, so we're like short a month there. And those are down about 8%. So we're down from about $112,000 a month to about $103,000. Refuse service fees, we're at 25.6%, so we're right on the money there. Stormwater service fees, 24% of our estimated revenues, so we're within a reasonable amount of the 25%. And St. Cloud OUC interlocal, we're actually a little bit ahead of schedule, but that's a set payment of $668,000 per month, which is 9.5% of the 2019 sales for electric. That's where that number comes from. Any questions on the top 10 revenues? Okay. And this is a breakdown of major fund revenues. So for the general fund, we're at 33.7%, which at this time of year, we're always going to be ahead of schedule because the ad valorem is mostly collected in the first and second quarters. Water fund, 22.6%. Again, we probably overestimated our water fund sales a little bit. So, but the water fund itself is very healthy, so there's no concern there. Sewer fund, 27.8%. so we're ahead of pace there. Sanitation fund, we're at 19.6%, 19.9%, excuse me. And the primary driver of that is our landfill fees for non-city. We estimated at 6.2 million, and we've only collected like 800,000. So we lost waste management revenue about a year or so ago. I believe that was prior to my time with the city, but they are in talks with Waste Management to get some of that business back.
Do we collect for what, Kissimmee and what other cities?
Excuse me?
What other cities do we collect from for those fees? Kissimmee, or are there other communities? At least I see Kissimmee trucks headed down there to the landfill. What other?
So we operate as a transfer station, so we take all our refuse to the transfer station, and then it goes out to Omni, which is near the coast. I'm not sure exactly where it's located, but about an hour east of us.
Okay.
So that pretty much explains sanitation fund. Hopefully we'll get some of that business back because we need it for like equipment needs for that operation. The St. Cloud Interlocal, as I mentioned, we're right on track, 24.6%. And the building fund is at 17.1%. Now, one thing to note on the budget for the building fund, that does include 1.1 million of prior year fund balance, so that's going to skew your numbers a little bit. So we're actually at 21.6% if you're not including that. And first quarter is generally a little slow for the housing market and for new permits, so I'm confident that based upon the number of reservation fees that have been paid previously mentioned, that we're going to catch up rather quickly. The Stormwater Fund, we're at 15.3%. Part of that is we're budgeted for a grant-funded project, SW 2006, which is the Illinois pipelining. So the budget went through in budget amendment number 1, and the actual transfer of the funds did not go through until January 14th. So it's a little bit of a timing issue. So when you adjust for that, we're at 41.2%. So we're ahead of schedule there. So a lot of times when your numbers are a little out of whack, it's just a timing issue. Any questions on the major fund revenues? Okay. Major fund expenditures. And once again, it's through 25% of the year, so I'm perfectly fine with them being under 25%, although, we also want people to spend the money they said they needed, so we don't want to be too far under 25% or too far over. So for the general fund, we're at 20.5%. That is mostly because City Council contingency of nearly $4 million basically sits there as an emergency fund that doesn't get spent, so that kind of throws off that percentage. The water fund is at 34%. That's mainly due to two major encumbrances for water treatment plant number 1 and water treatment plant number 4, both for over $1 million. So that kind of skews their numbers a little bit. And the actual numbers do include encumbrances, so we've committed ourselves to the service, but we actually haven't paid for it yet, so it's not money out the door. Sewer fund at 25%, so we're right on in there. Sanitation fund, we're at 35.7%. Again, that's primarily due to a major encumbrance for $2 million to the aforementioned Omni, where we dump our trash. So they've basically encumbered the whole year's worth of service So that's why their number is 35.7% through only 25% of the year. And St. Cloud Interlocal, 23.6%. So we're right on track there. The building fund, 21.7%. A little bit behind pace there. And the building fund is an ongoing concern as we have, fund balance of, more than we should. But we do have plans for an additional building. At last check, they're calling it the atrium for the building fund department staff at City Hall. So hopefully that'll stay on track.
Got a question, Wendy, I guess just for, if with the PD that we've talked about selling the property, we always seem to be crammed in at City Hall and all these other places. Where's all this, where's this building that you're talking, we're gonna attach it to City Hall?
It's going to be built under the bridge.
Oh, really? In between?
Yes, sir.
Okay.
I don't have all the square footages. Do you know the square footage, Wendy?
It's an additional, what we'll gain is about 30,000 square feet. And if you obviously are familiar with City Hall, the middle portion where the glass is and all those floors will be closed up, and that instead of it being open space will be office spaces. Then also the plan will be to move the city council chambers down to the first floor, expand that in order to have conference meetings, media room for those, and that'll include office spaces down there. And then land drops and, fiber optics for everything. And then you'll have a common security area right in the middle with like a picture one, like the hotel, one concierge in the middle. And that's to conform with PD's requirement of security to have one entryway instead of opening too many exits and entrance. And you'll have elevators going up. So there is some design, that we can actually send you over if you'd like. They're on big plotted, but we'll maybe get you a minute so you can have a visual. It looks pretty neat, completely closed off, and kind of looks like some of the Kissimmee, old colonial buildings, but still keeping the same facade. But it would provide a lot more space, and then we would reshift some of the people. Later plans are also some of the suggestions have been to use building fund to create kind of a parking facility in the area and build kind of a municipal yard, but that's really future stuff. At this point, we're looking at about $3.5 million to complete that and get some spacing and move some people because we're running out of it. You're absolutely right. So it's in the works right now. So.
Okay, cool. That's good to hear. Thank you.
And finally, the Stormwater Fund, we're at 19.7%, which the Stormwater Fund has its challenges. So we're actually thankful that they're a little bit lower than planned. Okay. Any questions on major fund expenditures? All right, major fund surplus deficit. So the general fund has a surplus of $7.2 million. As mentioned, that's primarily due to the ad valorem revenue coming, a big chunk of it coming in the first quarter. Water fund has a deficit of $233,000, but again, the actual includes encumbrances which are not actually paid yet. So when you remove the two major encumbrances there of $2.2 million, that gives them a surplus of $1.9 million plus. The sewer fund surplus $531,000. Sanitation fund, don't panic, has a deficit of $2.48 million. Again, they have the large encumbrance of $2 million plus an encumbrance for an excavator and a front loader. So those two pieces of equipment together are over $500,000 plus the $2 million. So when you take out all the encumbrances, we're actually at a surplus of $211,000 thus far this fiscal year, which we're thankful for due to losing the waste management revenue. We're thankful that we're in the black so far. St. Cloud, OUC interlocal, have a surplus of $85,000. That's about where we would expect to be. Building fund, deficit of $240,000. But when you take out the encumbrances, once again, they have a surplus of $139,000. Stormwater Fund has a deficit of $168,000, but if you take out their encumbrances, they have a surplus of $889,000. Any questions on the major fund surplus deficits? Okay. These are the general fund departmental expenditures. So with 75% of the year remaining, the last column will tell you what percent of budget each area has remaining. City Council, of course, has most of theirs because they're nearly $4 million in City Council contingency. Most of that stays there, so they'll always be high. City Manager, Public Information, they have 81.7% of their funding left. City Clerk, 79.2%. Legal Services, only 48.3%.
Hey, Jeff?
Yes, sir.
I don't see anything that's really, I don't think we need to go through every single one unless
Okay.
there's a question. I think your 48% is probably the only,
Right,
if
okay.
there is a question.
Perfect. So for legal services, we do have the legal services contract for our attorney. So that's encumbered money. So that's why that's, all that money is like spent up front. So bottom line, we have 79.5% of our funding remaining. And so that's about exactly where we would want to be when you factor in City Council contingency. Any questions on general fund departmental expenditures? Okay, and then thank you. Do have a couple other things to go over in your packet. They're not on the slides, but we'd like to give it to you in graphic presentation as well. So you'll see the introduction page, the next page, and then the sort of the revenue that tells you what's on each page. So we'll go over them real quick, and if there's any questions on what the fund revenue is from, it gives a really good description on there, so you can read over that. So for the ad valorem tax revenue, you're going to note on that have only total received to date of $1.9 million. That's a bit of a Scrivener's error on my part, because in the previous slides, you'll note that we've collected 72.1% of the money. So in that, I actually included the bulk payment we got in early January, since it was actually for December's payments. And for this is actuals. So as of December 31st, we actually only had the $1.9 million. And as I mentioned, to date, we've collected 90.6% of that total estimate. So when we have our next meeting, you'll see that we're like way up there. And the next one is your half-cent sales tax. This is the general fund revenue, and that is only 2 months. We are a little bit behind our estimate, but not a lot, as previously mentioned. State revenue sharing gas tax. Again, this is only 2 months, so we're approximately where we should be, just a few percent down. And state revenue sharing sales tax. Again, this is only 2 months. We're actually right close to where we should be with that one, about 25% when you include the month of December. That is not reflected on these reports because it wasn't collected as of December 31st. The 1% surcharge, as I previously mentioned, We're about 10% off last year's collection rate, but it's been improving by about 2% a month. For October, we collected about 300,000. For November, it was about 305, and it's up to about 309,000. In addition to the monthly payment, we also get a quarterly payment, which actually our first quarterly payment this year was about 192,000, which was actually more than last year. Last year, our first quarter payment was like 157,000. So hopefully we keep going in a positive direction with that. The gas tax, again, this is another one that's lags by a month. So we're close to on track with that. Little, I think 6% less than we were last year thus far. Building permit revenue, you'll see that I did get some statistics from the building department. They've issued 369 permits, 332 for single-family detached, 33 for attached, and 4 for manufactured homes. We're a little bit behind last year's pace, but the first quarter was kind of a slow time for permitting, and it's been picking up since then, so I would expect us to be back closer to our estimate by the next quarter's meeting. And interest revenue, and this will lead us into Miss Donna Cooley after I finish these last couple of ones here, and of 221,000 to date. We do right now, most of our money's at SunTrust, earning 1%, which is actually really good, and we have that in place until February of 2022, late February of 2022. And then we'll be moving our funds. We have a investment manager now, PFM, that we're going to leave our money at SunTrust earning 1% basically, and as long as we can, because at this point even a professional investment manager like PFM cannot beat that. So we're trying to maximize our city revenue as much as we have, as much as we can, and actually it's over $100 million. I think it may be, I'll let Donna tell you, but it's $120 million sitting in SunTrust, and that is insured, by the way, so don't panic that we have so much in there. And the water and sewer utility combined, we're at exactly where we should be total, 25% of our estimated revenue collected. And this is kind of a repeat of what we had as a previous slide. And with that, I will turn it over to my cohort, Miss Donna Cooley, which will briefly overview our investment performance. Thank you.
Any questions of Jeff?
No.
All right, thank you.
Thank you.
As I said, if you have any suggestions on what you'd like to see and or not see, please let me know. You can let me know in person, or you can email me, jeffrey.cooper@stcloud.org, and I'll be happy to, this is kind of a living document in my opinion, so make it as valuable of a document for you all as we can.
Thank you very much. Good job. Miss Donna, this is what we've been waiting for.
Yes. Good evening. Donna Cooley, Finance Department. I'm going to briefly go over the investment performance with you. And that's at the end of the packet that you have there. These are both for the year-to-date and quarter-to-date ending December 31st, 2020. So for the year-to-date, the portfolio had a return of 1.23%. In funds, that actually equates out to about $1.7 million for the year-to-date. The components of that are about 70 basis points interest income of about $948,000 and a 54 basis point adjustment in market value. We market the investments at the end of each quarter for financial reporting. and that's $734,655. For the quarter to date, the total return was 62 basis points, 0.62%. That equates out to about $224,000. That's what you saw Jeff show you on that quarterly report. The components of that, we had interest income of about 77 basis points for $278,000, but because rates increased in the long term in this quarter, the quarter ending December 31st, the prices on those bonds that we hold in that portfolio, there's an inverse relationship. The prices went down, and so we recorded a negative market return on those of about $54,000. Of course, these adjustments are for financial reporting purposes, and as we tend to hold bonds until maturity, so they will equalize and will be recaptured when the bonds mature. It's just something that we report for financial reporting purposes. As Jeff mentioned, you can see below the chart that shows the composition of the investments in the portfolio, and you can see that cash and equivalents is heavily overweighted, and that is based on the very favorable rate we're getting at SunTrust compared to the market rate that we could get elsewhere. And we're also positioning ourselves for the professional investment management to take over when that rate ends or the market rates exceed it. So, are there any questions that I can answer for anybody?
And if I could for the committee, just because I like to button up nice stuff and make this complicated thing as clear as mud. I don't know if we shared with you the background and when you're hearing PFM managing us and all that. So just in case, let me put it on the table, was that, as you know, PFM has always done our bond covenant management side of the business. It was later determined that the portfolio just got too large, and it was in the best interest of the residents, because that's their money really tilling around, that the management of it go to PFM so that we could be, one, diversified as well as we can, especially with the inclining, declining, and very nervous market that's going on. And the portfolio got to a size that it was the right thing to do for the residents to bring on PFM from that side and manage our portfolio. The background that they're saying as far as SunTrust is that we're getting some of the best rates because of a grandfathered in percentage rate. So we have a lot of our diversification sitting there right now because it is the best gain for those dollars. Once it sunsets, we plan to obviously make sure that PFM works for the money, which it costs us about $60,000 a year for them to manage a portfolio of roughly $129 million that we're talking about. So that's the entire background of why we went into portfolio management. It also created a good gain for us where we presented to council and it was approved the update of the policy that made sure that our policy was solidified. And actually one of the members of the team for the portfolio management was directly involved with legislative policy in investment, which was a plus for us that we had our policy vetted and reviewed, revamped, and we feel secure about it. So that's kind of how we got here, especially in some times where we saw the market, doing what we kind of thought we could do, might not do, but we thought it was, like I said, the best interest for the city, and that's where we stand currently. We're happy with this. We're monitoring Ms. Cooley along with the deputy. We're checking that out and verifying that it's what the best we can do with the resources and assets we have for the city.
That $60,000 we're paying them, that's based on what, a flat fee? Do they get any bonus if we make a little more, or do?
It's the standard fee for managing the portfolio that we have a contract with, and they do not get a percentage in the contract that I'm aware of for any gains, just because our investment policy doesn't even allow for us to do that.
Okay.
Yeah, the fee's based upon how many assets they have under their control. So it starts out, the first 25 million is 10 basis points or 0.1%, and then you move up to I think 8 basis points for the next 25 million, and then 7 basis points, and then I believe 6 basis points after that. So it really all depends upon how many assets they control of the city, which which now is none yet. So as we grow the number of assets with them, you know, the ultimate goal is eventually they will make more in interest than we could have on our own to make up for that fee. Because they have way more expertise and they have time to analyze different investments, and they have access to things that we may not. Like right now, they can't even get us, I think, 41 basis points. So after we paid them the fee of 10 basis points, we'd only be making 31 basis points when we can have our money sitting in SunTrust for another 1 year for 100 basis points. But once that goes away, then, you know, that 41 basis points is going to be looking pretty good, because if not for that, I think we'd be in other investments outside of SunTrust, we would be making maybe 20 basis points. So in net, it's going to be a net benefit to the city once that rate sunsets, about 1 year from today, actually.
Is there any performance expectations that we have on them, that a minimum standard or something like that? I know on a pension board, when they were managing our funds, there was an expectation they had to come up with like you got to make us 7% or we'll look for another company. Is there anything like that with this group at all?
Not in their contract, sir, but Donna and I will be monitoring their performance, because, I mean, Donna's been managing our portfolio for many years, and she will be, you know, up until we transfer, up until a year from now when we finish transferring the assets to them. So, you know, she'll still know what investments that we would have access to on our own and what those returns are. And if they can't beat basically that plus their fee, then, you know, their contract doesn't become beneficial to us anymore. And then maybe it makes more sense to do it on our own, but we really don't believe that's the case. Just from initial analysis, I think Donna determined, you know, without that 100 basis points at SunTrust, we'd be making maybe 20 or so, and they can make us 31 net of their fee right now that they've already told us. That doesn't sound like a lot, but on 129 million, it adds up. Every basis point adds up.
And on that pension board benchmark, of course, they've got a much more diversified portfolio, and they can go into equities as well as fixed income, because they have a longer range outlook, where the city funds, of course, our very first objective is safety of the principal. So we can only work within the fixed income market, very safe, liquid investments. So we don't have the potential that the pension board has to make that type of return. But they do, I think PAFM is using a government bond index, and yes, they're benchmarking their performance, and we'll be, as Jeff says, we'll be keeping an eye on them. And, you know,
Yeah, I was just curious.
We feel it'll be beneficial.
I was just curious, like, I know with the pension board, I understand the finance aspect. I just didn't know if this type of company has any type of performance that we're gonna go. At least, so it sounds like as long as you meet this 31%.
Well,
roughly.
I think honestly, Chairman, and you know, because of it's not written in the contract, but how we're going to measure it is you need to afford what we're paying you to do. So they better net out to those $60,000, and at least with whether it's a net gain, they should be able to cover the spread that we paid out, and that should delta out in net zero at a minimum. We're happy with that to give the outcome, and we'll be reporting to you that did they earn their keep, basically, which is the fee that we're paying.
Probably a good chart to put in here to make sure you track that, so you know, everybody knows that, you know, it's paying for itself, basically.
Okay, great. We'll note that to add something and give you that tracking.
And they have the expertise to use our investment policy statement to its full extent, where, you know, there's some credit instruments that we in the city, and doing this part-time is one of many duties that we have on our desk. we don't have the time to analyze those credits and watch the market. And these are experts, and they'll be able to utilize that and invest in different investment classes that we just have stayed away from because we just either don't have the expertise or the time to monitor them. So it should be beneficial.
Do we have a statement that says no derivatives?
I believe that's correct. We have an investment policy statement, and I do believe you're correct, but I'd have to verify that.
See, we're going to miss that. Any other questions? All right, thank you, Donna. All right. Other business, our next meeting, for those who are still going to be here, it'll be April 27th. Does any board members have any comments? All right.
Sound like a memorial service.
Well, I've enjoyed the company and appreciate all the work and input that you guys have offered. It's made a heck of a difference, I think. So I do appreciate your time. And if there is no other comments, since there is no audience, meeting is adjourned.
Thank you.
Thank you.